Welcome to Forex School Uganda, and if you're here for the first time, kindly subscribe, like and share the video as I continue to bring you more educational content on the channel. Today, we are going to be breaking down market structure, analyzing the charts from the higher time frames down to the lower time frames, so we can see where price is right now and where we anticipate it to get to in the next coming few hours, days, weeks, and perhaps even months, so we can prepare ourselves for early shifts and turns within the market long before they do happen. This will give us an advantage over the crowd and help us maintain our edge in the market. We'll be marking out areas where we expect such turns and shifts to happen in the market, and we'll then be dropping to the lower time frames where we'll be waiting for the setups that meet our entry criteria to form within such areas that we can then execute upon early enough before the crowd comes into the market to have us maintain our advantage and edge in the market. And hopefully we'll make some money from the markets today. Come with me to the charts. So looking at the Australian dollar, this is the monthly time frame. What we see is that price created an area of support here, which it then retraced and retested at this point here. And what we see with this present monthly candle, price seems to be bouncing off from it to the upside. And if we look at it closely, it's more of a formation of an inverted head and shoulders pattern, which could, should it be completed, could see price move back to the upside. But we'll wait to see what exactly happens, as our role in the market is not predictive but rather reactive. The best that we can do is to analyze the markets, but what we could see is price rise to retest this area of resistance up here. Now, if you further see from this lower support area, you can see that price has been testing and rejecting this area of support, and now it tested it once again with this bearish candle right here, and it could be a rejection we are seeing from this area here, and so we could see price rise to the upside to come and test this area of resistance, like we said. Now dropping to the weekly, what we see in this weekly time frame is that price with this bullish candle with this wick up here, together with this bearish candle that followed, created an area of resistance. With this bullish candle broke and closed above. What we see now is price retracing and retesting this area of resistance, now turn support. And if we take our Fibonacci tool to measure this impulsive move to the upside, what we see is that price is currently testing the 38.2 retracement level. While touching this support area, we could see a little more drop to the downside before a pushback to the upside. And once that happens, we will have an impulse correction, impulse formation completed in the market. However, this candle is still retracing and retesting this support area, and we could see a bounce off. Now, should it close bearish, then we will have a complete correction. However, should it move back to the upside and flip bullish, what we'll have will not have been a typical correction, but rather a simple retracement. But we'll wait to see what price gives to us in the market. Now, dropping to the daily. Now, in the daily, you'll observe that price has been making a series of higher highs and higher lows, highs and lows, higher highs, and now it is creating a higher low while retesting this area of support, and we will likely see a bounce off to the upside. And now when we zoom in to see clearly some details within price formation at the moment, you can see that price is forming this M pattern while retracing to this support area, thereby completing the M formation. And so after the completion of this retest, we expect a move back to the upside to retest this area of resistance, which is a completion of the M formation with the retest of the neckline. And now dropping to the 4-hour. In this 4-hour, what we see is price is ranging between this high and this low. So it's currently a ranging market. And now price has just tested this area of support, which is the low of the current range in which price is. And we could see a bounce of this area to the upside. And so what we'll be doing is dropping to the lower time frames and observing this area of support for setups to form that meet our entry criteria that we can execute upon to take advantage of this move to the upside, which on the daily will be a retracement to retest this neckline, thereby completing the M formation. And so we can only expect buys today in this Australian dollar USD pair. And dropping down to the 4-hour, we are going to be looking for setups within this area here. And we are talking about bullish setups, so we can take buy positions to take advantage of price bouncing off this support area back up to the upside. That's analysis for today. Expect buys in the market today with this Australian dollar USD pair. Thanks for watching. Remember to subscribe, like and share the video. You could also click the bell icon so you are alerted every time I post new content on the channel. But in the meantime, you could check out forexschooluganda.com for more educational content. I will see you again.